Hello everyone and welcome back to the channel. Today we're going to be talking aggressive portfolio. Before the Emerald and the Sapphire portfolio that I've already elaborated on before and made videos on, there were the 5 original portfolios: conservative all the way through aggressive. Before the two aforementioned options of Emerald and Sapphire, aggressive was the original go-to option and by the numbers is still by far the most popular of the portfolio options. The recent release by Raiz shows that 35% of people invest in aggressive still, and it's very likely to stay at the top for quite a long time. Aggressive is the only portfolio of the lineup that offers a 90% equity exposure, and this makes it highly desirable to people with a very long investment time frame, people that are looking to invest over 10 or more years and are not afraid of a bit of volatility in the meantime. Why 90%? Why not just 100%, you may ask? Well, the rationale is to retain at least a little bit of an allocation in bonds and money market, just so in case of a downturn, those bonds and money market assets can be sold to buy more assets, and on the inverse of that, in a market that's going up, some of the shares will be sold and put into the cash and bond allocation to lock in a little bit of profits. So let's take a look at this, shall we? As you can see by the breakdown down here, we have very little in the way of money market, Australian government bonds and Australian corporate bonds. All three together total just 10% of the portfolio, with the rest going entirely into equities. We have 54% invested in Australian large cap stocks, with the ETF being STW. We have 23.5% of the allocation going towards Asian large cap stocks, which is IAA. This is sort of your emerging markets type of allocation. You have 7.1% into the Europe large cap stocks. And finally, to round it all out, you have 5.4% invested in the US large cap stocks. Now this brings me to my main point of contention with the aggressive portfolio. In my personal opinion, it has far too high of an investment into Australian large cap stocks. There is nothing inherently wrong with investing in Australian companies. However, having 54% of the entire portfolio, if you just count equities and if you want to count the bonds as well and money market, that brings it to 64%, is just leaving you way exposed to the fortunes of one country. Now, in defense of this, I can kind of understand the rationale behind why they wanted to do this. I think their primary motivation would have been to create a portfolio that's very high in dividends, because a lot of people like the psychological effect of dividends coming in every quarter, and Australian stocks are very notorious for paying a high dividend relative to international standards, and that would have been the primary reason. Now, with the recent downturn, a lot of these companies have been forced to cut their dividend, which is kind of left aggressive in a very unfortunate position where its returns have been a little bit lackluster just because it's so dependent upon that Australian share exposure. Let me show you. This is the S&P 500. This is the US stock market. As you can see, it's basically fully recovered. It's a stone's throw away from being at its pre-COVID highs. Whereas The ASX 200, unfortunately, as you can see, it had the same sort of dip. However, its recovery has been far more subdued, and this is very, very evident in the aggressive portfolio, and part of the reason why it has lagged the Emerald so much, which has a far lesser exposure to the ASX 200 and a far greater exposure to US based stocks. I mean, most of us already live in this country and work in this country. For better or for worse, Australia's economy is entirely, or majority, dependent upon exporting natural resources, exporting education, and selling housing to one another. We do have a few prominent international companies like CSL, but for the most part, we're a very small player on the world stage. We constitute about 1% of the world's economy, if that. So we're not a big force in the world. However, I think this portfolio would be better served and rectified if maybe 15 to 20% of the Australian large cap stock exposure was taken and put into the US large cap stocks. To me, it just seems to make a whole lot more sense to invest in a country that's roughly a quarter of the world's economic output, home to many innovative companies, and basically an engine of world economic growth. But it is what it is, and the portfolio what it is what it is. With all that said, though, I don't think this is a bad option at all. It's not as good as it could be with the very high Australian exposure, but I don't think this is a terrible option, and you could do a whole lot worse than investing in aggressive. For a newer investor, for someone starting off on the platform, I would argue Emerald as a standalone investment option, but I think aggressive can be quite good. I don't personally use aggressive, but for people that do, it's certainly not the worst choice you can make, and especially for people that are looking to branch out into other investment avenues eventually, you can easily offset the heavy Australian bias by investing in something like Spaceship Universe portfolio, or you could even get on CommSec Pocket and buy NDQ or ETHI. Those two ETFs would be a great complement to the aggressive portfolio. I think this one overall will still see pretty good returns. It's had a bit of a rough trot recently because of the aforementioned downturn in Australian stocks, but I think, especially given in a year or two, portfolio customization is going to be a part of Raiz, as they have discussed in recent interviews. So that disadvantage will be able to be negated by picking what we want. In conclusion, and in ending, I just want to say thank you to everyone that's subscribing to the channel and commenting. We're already over 100 subscribers, and I am very encouraged to see the comments and feedback in my previous videos. I make these videos weekly, and if you're interested in this sort of content, I've made numerous videos talking about the other portfolios, my own experiences, and some general investing advice. So if that's up your alley, please subscribe, like the video if you like this, and I will catch you guys in the next one.